Good afternoon, traders. Welcome to our session. Not everybody is going to be here because the New York market is not working. And I can see that a lot of my traders are not here because they know the market is not working, and it's more of a Q&A, which is going to be more for those who are not in my group. Some of my traders are here, but not all of them. I can see Victor here. Let me just add Victor to co-host. You guys can thank Victor for all of these sessions that have been set up, all the emails you're getting and everything, all the help you're getting when you need it, right? He's the guy who does all of that. So good afternoon once again. Let's start. If you're new to, by the way, anybody new first time? This morning we had 2 people who were first time watching me. Anybody here for the first time watching this session? No, great. That's good news and that's bad news. That's good news in that you will understand what I'm saying. Bad news that you guys are not really sharing this stuff to anybody else who needs to see it. And there is about 1 million traders out there who have never seen this wave analysis, the way it should be done correctly, right? And wave analysis is the most popular thing out there right now. Go on YouTube and video it, Google it, go on the internet, Google it. You're going to find out that wave analysis is what everybody is doing now, including all the elite traders. They're changing to wave analysis because they're looking at the charts the way we start looking at it. It's different, right? So before I answer all the questions, I told you I'm going to make this an educational part for you. Let me go through a very basic stuff, something new. So what create wave analysis? Let's say you've never seen this before and you don't believe it. I mean, honestly, why would you believe that this thing is going to make an impulse or a correction or anything for that matter of fact? Because this morning I was watching a really popular guy trading. He was there years before I even start trading. I looked at him when I just started, really popular, but he is a fundamental person. He does not believe in anything but the news. He believes that the news is what drives the market. Here is the problem with that. The market does move during the news period, but the news is not what drives the market, right? The news is a moment in time that the market moves, and you cannot predict which direction the market is going to move based by the news you have. Because I have proven that many times. We have sit here and we trade all the news live. My group, we trade every single news event live. I am personally there to trade it. My traders are here. I'm not going to be lying to something open like that right here, right now in front of all my traders. That's what we do. And we would trade, let's say, interest rate. Everybody says interest rate raise, it's going to go up. Well, guess what? We have been selling the market a lot of times on the interest rate rate because we see patterns that say sell. We put a sell in. Guess what? It dropped. The market says sentiment, right? We say no. The market does move, use specific moments to move. Doesn't mean it will move based on, these markets are well prepared in advance before they move. So let me explain that for you. This is what you're going to, this is normally my first lesson that I teach when you join my course. So the first thing you're going to understanding wave analysis. What really drives the market? What is actually happening? So think of anything, think of anything, cryptos, stocks, anything, whatever it is. Just think of it this way. We're at this point. Forget about all of this. Just we're at this point. This thing could either go up, it could go down, or it could continue to go sideways like this in a very, very small range. Right? Those are the 3 things that could happen. What makes any of those 3 things happen? So first, for it to go up, we have to have more buy orders coming in, an excessive amount of buy orders coming in, which is over what the sell orders are. So you have very small sell orders and you have very huge buy orders. That will create an upward movement. And I said orders, not buy, not volume buying, just orders. A simple order could move the market because it creates a demand. And if I say I would like to buy, I don't know, 1,000, I would like to buy $1 million worth of this shares and nobody wants to sell it, what I'm doing is I'm stimulating the market to go upwards because everybody says, wait a second, this big company is buying, you know what I should do? Why should I sell? Let's wait and see why are they buying. I would like to have a higher price. At some point, somebody would say, you know what, I'm selling. And that is the point that the market stops. So you will have a demand to buy until you reach a point where somebody sells. Now, if that volume fills the volume you want to buy, the market stops there, and it could even reverse. If let's say the selling volume becomes higher than the buying volume, the market will start to start for where people would like to buy back. Right? Remember, this buying point is already filled, but there are more orders to sell. The market will go in the opposite direction until it finds a point where there's somebody who would like to buy. So when you see market doing this in an up and down small range, what is actually happening is transactions being filled. When you see the market moving fast in any one of these directions, what is actually happening is orders moving the market, not transactions. People like to believe that the market is being moved because somebody's buying quite a lot. No, somebody's putting out a huge order to buy and nobody's filling that order. That order is not being filled. That's why the market, if the order fills, the market stops. When there's an equilibrium in that point, it means the amount of people who would like to buy or the amount of buy orders is being filled by the amount of sell orders. The market finds a point of equilibrium. Now, we all know that market cannot stay at one place because the people who actually take part in this market would like to make money. That's the whole point of any market, making money. Buying at a cheaper price and selling at a higher price. That's the whole point of it. If you're the person controlling any one thing at any given time, if you own a store, if you've ever run a retail store, if you've ever done anything in buying and selling, and I've done that a lot in my life, you would know that the whole point is you would like to buy something for $1 and sell it for $1 plus. That's the whole point of it. Otherwise, you would not participate in that market. So even if it's a crypto market, you would like to buy it here, but you would like to sell it here. Now, only the big movers of the market will make that happen. Not us. We're not seen in this. We're not even in this scenario. It doesn't matter how much crypto you own in your pocket. No, you are not there. You're a microscope in that market. You're a microscopic, organism. They don't see you. You don't have value in the. You can believe it or not. The market is always being manipulated because it's a simple process of making money. If I want to buy here and I want to move the market there to sell, it's my job to manipulate the market to get it to that point where I'll sell. My selling could start here and I could be exiting everything by the time I get there. That's exactly the whole purpose of doing anything. Otherwise, there is no purpose in creating a crypto if you're not going to take advantage and make a ton of money of it. You can believe that it's created for whatever super idea you have in your head, but it's all about making money. So anything else, including stocks, including all the derivatives, anything they create at any point is, how can we use that to make money? And who is going to control it? What's the controlling package? And who is going to own it? At any given time, you always know what volume is out there. So you know how much you need to own so that you can drive it up, sell it, and drop it after that. It will come down at some point, right? So when you see the market doing something like this, your job is to figure out, is it going to go up or is it going to go down? That's all you need to figure out. The minute you see that, you need to figure out for yourself, this equilibrium is going to break out. We call it flags, we call it patterns, we call it whatever you want to call it, anything you want to call it, doesn't matter. You see the market going sideways. You have to realize that at some point it's going to break. And it's going to break either up or it's going to break down. And if you go back and study 1,000 or more of these, you're going to figure out that if the market comes this way, 90% of the time it goes out that way. If it comes in this way, it goes out this way. But that is only true within this pattern, within this single pattern. What does that mean? That means that if this pattern is a 5-minute pattern, the market will come in here in 5 minutes, make that sideways and drop 5 minutes, which means you're going to have a very small impulse here. If the market is a 15-minute market, you'll probably see something like this. Comes in here, make this, drop this. This one would be slightly bigger than this. If the market is a 1-hour market, you might see something like this. Come in here, do something like this, and drop like that. These are all going to be bigger, but this will also be bigger. If the market is a 4-hour market, you will see something like this. Coming in here, coming out there. But within this move here, you're going to have a few of these 1 hour one. You're going to have a drop, you're going to have a consolidation, a drop, a consolidation, a drop, a consolidation. Within each one of these here, let me use a different color, blue or orange. Within each one of these here, you're going to have a few of these. You're going to have a drop, a consolidation, a drop, a consolidation, a drop. And within each one of these 15 minutes, you're going to have a few of these. You're going to have a drop, a consolidation, a drop, a consolidation, a drop. That's the fractal nature of the market. And that is the way it works. So this is where wave analysis comes in. How much variations do we have of this sideways and on what time frame? The 15 minutes is simple. It's going to be more like this. You don't even have to worry with what's inside. The 5 minutes, it's up to you if you think you have the skill level to trade it. I don't think most of you have the skill level to trade it. The 1 hour is where we stay, because the 1 hour is more like this, but it has a ton of variations, right? If you follow me, you would know. Expanding, contracting, regular. We use these names because these were the names that Elliott used. And since most of the idea that we are doing, that market moves in wave analysis, I took from Elliott. The idea, not the way we look at market, not the counting, not the way we analyze the patterns even. But to give credit to him, that's where I started. I said, okay, why change the name? Use the same name. I think that his names are very good. A flat is a flat, a running flat is a running flat, right? So we stayed with the same names. There are only a few patterns that we have identified which are not in Elliott wave that we would have with us. Extending running flat. I think contracting flats you don't see on Elliott wave, and a few more other patterns that, you know, we personally identified the way, or variations of the patterns that we identified that you might not see there. But the patterns themselves are important only to tell you which direction you're expecting to break. So if you can study what's happening inside of here, if you can study what's happening in there or in here, and you understand how this structure should be in here, then what you're saying to yourself, if I understand this, then I can understand how this is going to behave. I can understand whether it's going to go this way or whether it's going to go that way with a very high probability. And the probability is about 80%. So 80% of the time, you would watch it repeat what it's doing. Each pattern is unique in its way, right? But it's identical to patterns of the same, right? So you will see those flat over and over and over and over every time. And then you would study them and figure out, okay, which direction that one is going to go. And that is what we've done. The amount of time we have done this, and you know, the precision with which it's done, it's amazing. It's so amazing that my traders don't even get amazed by it anymore. They just expect it to happen. And the 1 in the 10 time that it doesn't happen makes you freak out, right? What the hell is happening here? It's supposed to go. Why is it not going? Right? Sometimes in rare conditions that, well, they don't break out, and that's okay. There's a momentum. Instead of the momentum coming, instead the orders coming for the upside, the orders drop, which means that there is a sudden influx of, you were expecting buy orders to dominate here, and then the sell orders dominate. Okay, those are rare. Those are about 10% of the time. So you can ignore the 10% time, because if you use the strategy, if you use a very good strategy to trade it, then what you're saying to you, that I have to use a strategy that is excluding those 10% of the time. And we do have that. We do have strategies that exclude those 10% of time. So you're not even in the trade when it doesn't go. And a few times you will get tagged, but it will not go the distance you expect it to go. So you would see a perfect flag, you would get this, you would have a perfect flag, but you're expecting it to move to a certain level where you said, well, that would be close to my target. And instead it dropped, it comes here, it does break the top, fulfill the pattern, but instead of going more, it kind of reversed from this point. Which means there were enough sell orders coming in here and not at this point. So you would expect the sell orders to come in from a specific part based on the bigger pattern. But instead, the sell orders coming from a much earlier place, which is why we have trade management. And this is you will learn that this is the most important thing. The trade management. Because even if you accidentally got into the wrong side of a trade, but you use good trade management, you will get out for a very small loss, or if you're lucky, break even. And that's something we do 5 times a day in all our trades in the trading room. And that is why our trading room works the way it is working. We identify the trades we're looking at, and then we update each one of these trades 5 times a day, which means you will know exactly what we did with the trade and how it's going. And we have a lot of traders in the room who can do that. So that is what we're going to be doing. And that is why trade management is the most important thing. Just giving someone a trade is not, you know, you can do that, but then you end up taking out that trade for break even, they lose the trade. You end up taking small profit, they lose the trade. Only if the trade really go all the way to your profit, to your target point, then they get that trade, right? If you take about 60% of your trade to be break-even trades, of all the trades you take, they're going to have 60% loss that you don't have. See the difference? We are going to have 60%. So at the end of a month, you would see us in profit, but you would be like, well, I lost so many trades there, didn't work well. Those were break-even trades. Why? Because not all of them will go to your target, and even the ones that go, they're not going to go immediately sometimes. The ones that go immediately, perfect. The ones that don't go immediately, we manage them. We either get out of them and get back in them, or we move it to break even and you got break even in the trade. Sometimes we still re-enter because sometimes the trade doesn't go immediately. So you're expecting a huge volume. Let's say this level. Let me erase that again. So let's say when you get this and you get this, by the way we look at the bigger patterns, this one should come here. So that's about a 2-to-1. But when it came here, it stopped and it starts to do this. And you're thinking, well, no worries, it's still going to go, right? Basically. But then instead of going, it drops here. So what happens in the equilibrium here? It didn't find more orders to push. So what they're doing to do, remember what I said, if the buy orders doesn't come, the sell orders are going to come. One is going to dominate at some point. You get a huge sell order coming, drop the market here, and then the market goes back up. This is your next buy setup. What we would do in there, we'll get the hell out of it. And we did that with 2 trades this morning already, which we took, we closed for break even, and great. And the reason you can do all of this is because you understand patterns to an extent that you can see at any given time whether a pattern is going to go or it's not going. And that is what you need to do if you're trading the way we trade, short-term, day trading. If you're investing, just buy and walk, go sleep if you want. You can go sleep for 5 years and come back. But if you're a short-term trader like us, that is what you need to know. See? So I hope you guys learned something about wave analysis. That is what actually causes wave patterns. And if you can read them the way we can read them, if you understand them the way we understand them, all of this is not surprising. None of this in this chart is surprising to me. Right? We understand every point, how it can move, what it's doing, what it's going to do at any given time, even from the 5 minutes, from the 1 minute, if you want, we just don't trade the 1 minute, but from the 5 minute upwards. And that is why it's so accurate. Right? How you explain pullback here? You mean how I explain pullback where? Let me go through all the questions from the start so I wouldn't skip any. And if I ask you for more details in your question because I passed it, you'll give me. Hello, okay, we didn't know it is off. Okay, we got that. How to know an impulse and a corrective wave is ended? I think I answered that one already. We're going to go with the next one. UJ is that we got that. I see a monthly flat and the UJ expanding or running. That's a running flat. We're looking for a running flat on the UJ on the monthly. I think you're talking about this one. It's going to be a running flat. So sorry, let me bring it back. We're going to look at this coming back here, to be a running flat like this, and then upside, basically. That's what we're expecting. That is why you see we already have the forecast there sitting. That's close to what we expect to happen, right? Let's go. What is the next one? Corrections means war between sellers. There's no war in the market. The same seller is the same buyer. The idea, I think a lot of traders have that idea because I don't know if it's the brokers or who is selling that idea. It's the traders, a naive way of thinking. They're bulls and bears fighting in the market. Nobody's fighting anybody. That's BS. That's close to BS. There's no war going on. The same person who's buying from you is the same person selling to you. It's just a pure manipulation. He would like you think that there's a war going on somewhere. The only time a war going on is when one country wants to drop the currency of another country. And we know, I don't want to go into politics, but we know who wants to drop whose currency and when. That's a war. But that doesn't happen within the way that doesn't stop wave analysis from working, right? We know that. So we're not going to go into that politics. But otherwise, that on a basic normal trading day, there is no war. There's a normal, the same person who was your bull is becoming your bear because he's just moved the market to where he wants it. And now he's going to turn it, right? Basically. So think of it because it could be the same person. Think of it as the way I explain it. Think of it in terms of orders. Just think of orders. I could be the same person putting a buy and a sell order on. You could be the person having a buy and a sell order on. The volume of a buy and a sell order is what's going to move the market. My buy and sell orders don't move the market. Yours wouldn't either. But I can guarantee you, if one of the big banks or the bigger countries put an order on, that would move the market, because the other banks will say, okay, we need to fulfill. So let's say Citibank come out and say, hey, I would like to buy yen at, I don't know, whatever price. We're going to be buying yen if yen comes to, let's say, this level. If yen comes to this level, we will buy it. Great, right? If you're selling yen, right? If you're at the top here selling yen, nobody's going to buy it there from you unless it comes back to that level. You follow what I'm saying? Okay, but oh no, wait, let's wait. Yen is going to get stronger against the dollar. That's why Citibank wants to buy it at that level. So when it gets that strong, then they'll probably buy it, and whatever they're going to do with it, I don't know. Or they want yen to come to this level before they buy it. Whichever, it doesn't matter. Let's say they said, okay, when yen comes to this level, then we'll buy. We're not buying it yet. The market has got to move to that level to get it to fill, right? I'm just giving an exaggeration, but where the big orders are is where the market is going to go to, because otherwise, you can't, the smaller orders will be gobbled up within the direction. So I hope that understand. Don't use the war terminology. That's mostly for people who are selling you crap. How you explain pullbacks here after the breakout? No, the bigger one, check IDC chart on the bigger pullback. Any pullback is a correction, so I'm not sure what you mean, but let me check the chart, and if you can draw on my chart, you let me know. How do you check the pullback where? Which pullback exactly you're trying to say? Monthly, weekly is the same chart. I'm not sure which pullback you're checking on. Like this one here, that's the consolidation range. And then it break downward. This was a small consolidation range, breakdown. This was a sharp move up, range, go back up, right? So we did go all the way here and then drop. I don't see a contracting flat here. That would be perfect if that was a contracting flat. Now, could it be that that is a contracting flat and I'm missing it? Possible. Then we will trade this up to the top here and then we'll watch it come back down here. Right? There's a high probability it's going to come back here. So what we're looking for is the possibility that we're in a range like this, but a bigger one. Here's a range. Here's a good range. But this is a bigger one. You follow what I'm saying? Is that the market will go to a place, it will come back, it will go to a place, it could even come back here and then go back up again. So we're in a big range right now. I still think this is going to pull back first. I believe it's going to pull back first and then go back up. I do believe it's going to do it, but if we're wrong, they'll come to the top here and then we'll come back there. It's possible there's a contracting flat there. I just can't identify it. Not at least not yet. So we'll have to wait and see. But I believe, we will get a pullback. So let's wait and see. We're still buying for now. Let's see if we get a pullback. Explain pullback. I hope that explains it for you. Remember, the whole basic concept is the same. The market, what we call the market, is always, I think I explained this morning for those of you who were in it, the market is always making a single pattern. And a single pattern means 1, 2, 3. And any given time frame, this is what the market is doing. So if you had a yearly move down, I can just pick any chart and I'll show you. At the end, I'll do it. I'll pick any chart and show you. In your previous example, you took the trade and it didn't go to the point of expiry. You decided to close the trade in the first consideration. How big this consolidation should be? That's a very good question, Chris. And that is where you'll have to join the course to get that. I assume that question will come in, right? It varies. It varies on the time frame. It varies on the chart we're looking at. It varies on the setup. So I'm going to give you 3 points that we look at. It's not only the time, it's the pattern. So let's take one of them, the Swiss. This one is not only the time that we were keen on, we were keen on the pattern we're looking at. So this one, the idea of this is that this drop, we remember I told you we were in a flat, 1, 2, and we have to break that low. So this single move has to break the low. So in this case, if we don't break the low and we start to go back up, you're closing the trade. That's one thing you would have to do. So what is important here is not so much a time factor, but a pattern. In some cases, especially on the hourly chart, it's a time factor. And the time factor also still has to do with the pattern, whether the pattern was completed before it tagged you, or is it tagging you to make an expanding flat. So everything you are going to do in the chart is going to be based on the pattern you're looking at. So your ability to read that pattern perfect or close to perfect and the best you can, that is what's going to help. Now, I don't think there's any group out there who call themselves wave analysis group or wave trader or wave whatever they want to call themselves. I saw, I don't think any one of them have the amount of qualified people on wave analysis to do this. Remember, I created this way we look at it, right? This whole thing about wave analysis is something new from Elliott Wave that I created. So I don't think you're going to find any group better than us to do it. And most of those guys actually bought my course. Some of them actively took my training course. Some of them bought the course and they ran away. Well, basically, you get the point, right? You're not going to have a better place to learn that. And like I said, it varies. So you would have to learn all of the conditions for every situation. Like we have for every given situation, we have a set of rules, criteria that what you're going to do. If this happens, you're in the trade, and this happens, what do you do? But good question. I think you got my point, right? You got the answer. Let's see, UJ monthly flat. I think we just looked at that. How to define divergence with MACD between two impulsive waves. So that's very simple. I think everybody should know that. We're always looking for divergence. You can look for divergence between any given 2 point, any given 2 impulse. So if you're in an uptrend, let's say we're in an uptrend like this, I would look at this point. This is the correction and anything above this top, right? So let's put that on, let's say, an hour. What you would look for divergence is between this one here, that is this point here in the MACD. That is this point in the MACD. And this point here. We don't have divergence. See? We don't have divergence in chart. So what it's telling me is that we can have more corrections and more up move. That is all that it's telling you. That the momentum is not there, that there's more momentum to come in the chart. Don't read more into there. Don't read more into the MACD. All the MACD is telling you is that momentum is slowing down, right? And that divergence will mean 2 things. Divergence will mean a deeper correction and continuation or a reversal. And again, that depends on the specific patterns you're in. If the pattern is completing itself and you see divergence, the high probabilities you're going to reverse. If the pattern still has more to go, the probabilities you're getting a correction and it's going to continue to go. That is most likely what you're going to see in terms of that. There's nothing more to that. Don't read more into there because that would just get you in trouble, right? Don't take divergence as a point where you're going to sell or you're going to buy. I see people say, well, there's divergence, I'm selling. No, not necessarily. That could be a very small correction and a continuation to go in the same direction that you're expecting it to go. So there was a question that I said we'll come to. Can anybody remind me what that question was? Direction. There was a question, something I said I'll come back to when we'll pick any chart and we'll show you. If anybody remember me what the questions, we'll go back and do it. Because by the time I answer all of the questions, I forget. Okay, somebody was asking me a question about. Okay, 1 second. Let me just see. There's a question here. If I can find it. What was the question? The difference between wave theory and Elliott wave. Oh, yeah. Yeah, the single pattern was showing them. Oh, the single pattern in the monthly. Yes, I'll come. Thanks, Vic. I'll come to that. But let me answer another one. Somebody, I don't know if the person's in the room, but there was a question from someone asking what's the difference between Elliott wave. I think I got it on Skype on wave theory and Elliott wave. The person just happened to come into my videos and he's new. And there's a lot of difference. The difference is how we look at the chart. So the first thing is you will notice I don't have a lot of labels. Not that we don't label, but I find them to be, the label is more of a guidance of where you are in a specific given time. And I think there's a lot of things that in Elliott wave that we don't use, like the variations of patterns and where the market is going to go and all of these. There's a lot of stuff that Elliott wave for whatever reason, has that. I don't find them, I find them either outdated or incorrect. And this is not to start an argument with Elliott Wafer. I really wouldn't get into that. I don't have the patience for it anymore. But this is to tell you the way we look at structure. We don't decide. If the main thing you're going to look at in Elliott Wave analysis, we don't decide what is going to happen next with the chart. The Elliott Wave will tell you that there's a concept of you're going to have 1, 2, 3, 4, 5. Cancel that immediately. If any one of you can prove that to me all the time, you're great. None can prove it. I challenge many Elliott Wavers and none of them can prove it except making a lot of noise. Because that's not true. You can have 5, you can have 3, you can have 7, and that would be an impulse. Including when you're dealing with the corrections. What is a zigzag pattern? Show me a true zigzag pattern. It doesn't exist, right? Maybe it existed when Elliott Wave was trading and he looked at the way he looked at it. Remember, he didn't have a computer. He didn't have the equipment we have. What he did was super amazing. None of us here would probably have done that if we were in the same conditions that he was in, right? But we have different conditions. The rate at which trades are happening, the volume of trades, the speed of trades, everything is different. Patterns will vary, right? So variations of the patterns is what we're looking at. What I'm looking at mostly is not trying to tell the market what it has to do. It has to make 1, 2, 3 go 1, 2, 3 go 5. It's following what the market is doing, what it has done in the past, and what it is doing now. So we follow the patterns precisely to what pattern we have now, and what is the next pattern we think can happen. And if you go with the concept, which I'm going to show you, that you're always in a single pattern. So if you look at a yearly chart that has a huge move coming down and you're here now, eventually you're going to retest that low. Maybe 20, 30 years, 40, 50 years, doesn't matter, you're going to retest that low. So it's based on the concept that you're always in a single pattern. You're always in a single pattern. Now, because this is a yearly chart, this alone might take you 20, 30 years to happen. And you might be trading in one of these right now, going up and down. You might be in one of these move here going up and down right now, right? And each one of these may take a couple of years to happen. So what let me bring the punk chart up. I think that might be the most amazing one to show you on because it has a lot. And I'll probably bring the one punk chart up as that much more. Let's bring this one up. Since it's an educational part, let me give you, the most I can probably give you right now. And here's what I want all of you to do who know me and who've been following me when I was on TradingView. I want you to remember this. Remember this part here when I showed it from there coming down? And when I said we're going to come to break this low for sure. And then eventually, somewhere along at the bottom here, this market might start to go back up. And everybody freaked out. That can't happen. Where the hell are you getting that from? Well, we broke the low already. The market is not going up as yet because I think we have another flat here. And I think when this was coming down, we already identified that that is not impulsive because there's a lot of correction in here. And that means this makes another flat and we're coming to break that low. We might even break this low. This was the all-time low, but we might, because all of this came from way above, right? That was when the British Empire was the biggest thing in the world that ever happened, right? Like this, all of that happened. And this might even break that low. But remember, you're going to complete one pattern. 1, 2, 3. So at some point in the low here, we're going to start to see an up move happening. I don't know what it's going to be like. Would it be sharp like this? Would it be slow like this? Would it be a sharp move and a deep pullback and another sharp move? It doesn't matter. You're going to start to see an up move happening once you come to that low, right? Because we have completed. Did I say pattern work? 1, 2, 3. And then they come down. You got another pattern here. You got another pattern here. And you got this one is coming down. You've got, if you look back in this, you would find a series of patterns of the same type. So you can expect that once we break that low, which we're about to break, it is going to go back. Remember, I'm showing you a single pattern here. So let's cut all of this off and you'll see another single pattern. Cut all of that off and you're seeing a single pattern. 1, 2, 3. Let's cut all of that because this is a smaller one than that. We're not going to go into the details of why, but I'm telling you that. Let's cut all of that off, and you're seeing a single pattern. 1, 2, 3. Let's cut all of that off. We put it to this one, and we'll go to daily and put it here. Let's go back. We have to go back to where the top is. And here is the top. I think that's the top of this piece. Coming down, yeah, this is the top. You're going to see a single pattern. You're going to see, well, this might get more than one, but you're going to see something like a 1, 2, and a 3 dropping. You might have more smaller patterns. There's not a chance that that might be the only. You might get one more in here. You do have a few smaller ones here. But in bigger picture, this is only one piece of that bigger pattern. And the lower you go, every time you go lower, you're starting to see more and more of the single patterns happening. You're always in a single pattern. So we're trading in a range now, coming to break this low. And once we break that low, we will be very interested in when it's going to turn to the upside. So you go to the 1 hour, and we are about to break that low. See? So once that low is broken, start looking. It doesn't mean immediately. It might even take you 2 or 3 months before it actually goes up from that point. But because this is monthly, right? So it might take you, it might travel downwards for an entire month, you know, coming back here and coming back here. Like I said, we might even break this low before we actually start going back up. But it will. And the monthly, that's not a big move. That's a very small move. Maybe 2 or 3 months down and then up all the time. See? So these patterns do work, and they work for many, many reasons. So keep watching them. It's a single pattern I showed. Let's take which other charts? Take CAT, for example. I'll show you a single pattern. Go back to the monthly. And here is a single pattern. See? So it doesn't matter whether this comes from here or it comes from here. Right? You have this move down here, and you're in a single pattern here. 1, 2, incomplete. This would be one part of that. If this comes from the bottom, then it's even much easier. This would be one piece up. This would be a pullback. This would be one here. You'll have to have a pullback, and then you will go up. And this will be a single pattern. Remember, the pung had this one already inside where I showed you this big flat in the middle of the pung, and we are going to break the low of the pung. We're going to come back here to break the top. That is going to be a single pattern eventually, right? So where we are, we're in one phase of that single pattern. That is, we're in this phase. And this phase is the corrective phase because this is the impulse. So you're trading in a correction right now. Although you don't know it because you're in a really, really huge correction. The range of that correction, we're trading in this range. We're literally trading only in this range. This is our range of trading right now. It's huge, right? We're not even trading in reality. When you go down, you're not even trading in that range, right? This is the range. Remember I showed you this impulse? We're trading in this move here. And all we want to know is whether this is going to go break the top now, or if it's going to come retest the bottom and then go break the top. So remember what I tell you. Let me show you that again, even on the bigger time frame. You're going to have an impulse. You're going to have an equilibrium point, and then it's going to break one. If it comes in this way, it goes out this way. You're going to have an impulse. You're going to have an equilibrium point, and then it's going to break out. You have an impulse. If you go back and look at my forecast, you would see me drawing something like this. 1, 2, 3, break this low, and then go back up. But then this single one broke the low. So here, when the single one breaks the low, in terms of the pattern, that's a complete pattern. In terms of what we understand, the way we look at pattern, by breaking the low, the pattern can be considered finished. It doesn't mean that it's finished. It means the criteria for that pattern is over. It doesn't have to have 3 waves. This single one could end it. What we would be looking for is whether we get this reversal now. But when it starts to do this, I'm thinking, look at this, and look at this, and look at this. There's a high probability we might still do 3, break this low again, and then go back up. See? So we're going to get 1, 2, 3, 1, 2, 3, 1, 2, 3, and then go back up. Remember, this is going to go back up because you're in a correction that is going to go back up, right? This correction is going to go back up. This here, this flat is going to go back. Eventually, even if it comes here, it's going to go back up there. And I can tell you one more thing. When it goes there, it's going to come back down, right? So if you look at the way, and if you understand the way pattern develop, is that when we get to that top, If it does come back, there's not a fact that it has to come back, but if it does come here, break this low, to complete the three-wave structure like this, we're going to go back up like this, and we're going to come back here all the way back here. And then we're going to go back up again because we have to complete this pattern. And then we're going to have 1, 2, 3. And then we're going to come back down like this. Again, you're going to look at that and say, something has got to be crazy with this guy. Why do you ever think the market is going to do that? Why not take a snapshot and wait? Take a snapshot and wait, because if you take a snapshot and wait, you will come back and you can go to my Facebook page and you would find the forecast where I showed you this one. From here, breaking this top and dropping. So I can show you the break of the top. And there is a forecast on my Facebook page when the market was there. And you know where we put it to go? Only to break this low. And just like I'm showing you that long-term thing there where I tell you that when this dropped from the top here, it has to come and break this low. The same thought process in your head now when I'm showing you the cat is the same thought process was in those people's head. He has to be crazy. Pong is very strong. Actually, one guy told me that, and he was working with some hedge fund. He said this thing is super strong. Euro was in a mess. US was in a mess. Pong is the thing. It's going to go. Everybody want to buy Pong. And I'm thinking, I have no idea what you're talking about. Maybe they're in a mess, but I don't know anything about that. I'm telling you what the pattern is likely telling me is going to happen. Turned out it happened, right? So the same thing. You don't need to know why. I don't know why the cat is going to behave. So I just looked at all the patterns that I looked at in the past. And then I see that they have this certain behavioral pattern. So there's a 80% chance that that behavioral pattern repeats itself. Now, if we know, if you put logic onto it and you understand that nothing can go in one direction forever, let me go back to the cat that I was looking at. That is the IDC. Yeah. If you understand the logic that nothing can go in one direction forever, you would understand that at some point, even if this comes back here, it will have to go back up because you're in this sideways move. And that after we come back up here, we might even come back down and we might even go back up, and that would create this pattern. And if we get to this level, then there's a good chance that we might even come back down, which would create this pattern. And then when we come to if it drops that much to the bottom, there's a logic that it might go back up. Remember when the war started in Euro, the Russian ruble was going skyrocket and everybody was like, oh my God, you're going to go to 200. Any one of you who follow me would know that I tell you, you're never going to see that. It's not going to happen. If you have rubles, hold on to it. You want to see where ruble is today? Because it cannot happen. There are two conflicting things that are happening at the same time. One is the price of oil, and two is Russia is huge. Russia is huge. It's huge and it's wealthy. It has an enormous amount of natural wealth that everybody needs. So all you had to do was give the manipulation time to stop, and then the ruble went right back to where it should be, which is strong. Now, it will go back weak again. It's like I said, it doesn't go in one direction forever. I think if you look at rubles, you'll see how strong it is today. And go back and watch at my webinar when it started, when this was going. And I was like, don't worry about it. It's going to come back. So those who thought, I think one guy said, tell him the war is, oh yeah, I remember one guy said, somebody should tell him the war is happening. Remember that guy, the one who said, somebody should tell him the war is happening? And I was like, okay, when it starts to drop, come back. I think that was on gold and silver. It wasn't on the oil, it wasn't on rubles. It was a gold and silver. They started to go up a little, and I was like, okay, you come back 2 weeks after and tell me when it started to drop, if there is a war going on. Well, there is still a war going on the last time I checked, right? Gold is down, silver is down, ruble is getting strong. Really? News is what moves the market? Tell that to all of them. And then you find that they don't want to believe it. They're like, oh, no, well, something else happened. It can be patterns. Well, it is. It can be, and it always will be. That's the whole thing about manipulation. The market is manipulated. And if you understand that, you would make your life easier. You don't have to worry with all the stupidness you're listening around on the internet. It will help you. It will give you the advantage. It will give you the edge in the market. Okay, let's go. What are the questions? Sometimes correction will be a single wave. No, never. Correction is never a single wave. That first sentence is incorrect. We keep on waiting for the next two waves for correction to complete. It means if you keep on waiting and you're saying they don't happen, you do not understand the chart. You're reading the corrections incorrectly. Completion occur, although the next impulse have started. No, you're wrong. You're getting it wrong. I'm telling you, show me one. There are rare cases where you have a single sharp move and the market keeps going up. Expect an extended running flat. That's a pattern that Elliott has not identified, but we identified, right? So let's say, for example, you have this as a sharp move and the market looks like it's going to go up forever. We still followed by another one sometimes. You will always see that. A sharp move is always followed by another sharp move at some point. And that is why we draw this. And we said we were expecting this to come back down. Or that is why we have the yen like this. Now, in a range that is huge, like this, take this for example. In a range that is huge like this, and you start to get buy setups on the bottom going up here, you buy it. Right? You buy it because if it's short, let's say the impulse is short like this and it's going up and it's going up. Well, this is a little extra for you. Let me give you the next. If it breaks the top and it make a flag buy, because what you're going to have is an extended running flat. You're going to get something like this in the future and you're going to get this running flat. It's called an extended running flat. You get a number of flags in here and then you get it. We know that pattern. So when we see something like that, what we look for is the size of the first impulse to decide whether we're going to trade within the corrections. So we take trades within the corrections if we know that the impulse is huge and there is going the correction to take it back all the way to the top. We took a trade like that today. Was on the yen, was on the dollar yen right at the top. Let me go back to the 15 minutes and show you. You weren't in this morning with us, right? We didn't take it, but we have a trade like that. So you have this impulse, we have that move up, and we have this. And I'm thinking this has to come and break the low. So with a flag here, we were looking for a sell. Now that it break the top, you're not selling it. By the way, take it off. It's not that you're not going to get the impulse, but the impulse is likely going to come here, go back up like this, and then drop. So I would rather wait for that one. What if we have a contracting flat somewhere in here with this? What if this here is a contracting flat? Because it didn't come, this one is the one we were trying to sell, but it didn't come here. Well, then this is going to drop. So if I get a flag here, we're going to sell this to break the low and still expect it to go back up. Now, because this is an all-time top, we're going to take that sell. You follow? It's a little more. Now that that is an all-time top, what you're saying is that all-time top could drop. And they could drop, they could make a very deep pullback as long as the top is not broken. And it could drop really sharp. So we will take any sell we get in the yen, right? After reversal, wait for flag. At any given time, you have to wait for a flag. You have to wait for that confirmation, a flag or a correction. Sometimes it won't happen. I would love to see a chart where that doesn't happen. In days on Nifty, you don't get a correction. I think you're reading the Nifty charts incorrect. Let me show you the Nifty charts we have. We have been actually doing very well on this Nifty chart. We have been doing amazing on that Nifty chart if you are following me, right? Because remember when this happened and we sold that down and then we started to buy this and we said, look at it at this point. If it starts to come back here, we're going to have a bigger flat here and we'll go with a contracting one day. That's one option, but I don't think the contracting one, this was a question somebody asked me whether that could be a contracting flat. And I said, only if this comes back here. We don't have this. This looks more like it's going to go up. We bought all of this. All of these are buys you see. So I'm not sure where you were waiting for what this, if you were following me with Nifty, this was a buy, this was a buy, this was a buy, this was a buy. We actually bought this one and then we closed all the buys at the top here. If you were following me, all your buys were closed at the top there. Why we closed them there? Because the chances are it could go back down. We don't know that that pattern is completed itself. Right now, it's confirming that it may be completed itself. So we're getting a consolidation at the top here. You got 1, 2, 3, you get this, you probably get another one here. You go back there, you probably get another 1, 2, 3 here, and then you're ready for the buy. See? Monthly mostly in intraday. Now, these are sharp reversals intraday. That's what I'm saying. You're reading the pattern incorrectly. You're not reading the pattern correctly. You don't understand how to read patterns. That is why you think they're all sharp waves. And you know, if you're reading patterns correctly, you would know what to look for. I don't know. Not giving flats or flag. I just show you a dozen of them that we trade up and down. This was a sell. Let me show you. This was a sell. This was a sell. These were sells. This was a sell. When this started to come down, I think the first sell we got was this one on the gap. Break the low, take profit. This was a buy. You can see the lines are there. I'm not putting them now. This was a buy here. 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 There was a buy here that we took also. And then all the stops started to move up until we got taken out. I'm not sure what you're looking at. Those are buy setups. If you follow me, go back to each of these dates and check my weekly webinar. Although we do them daily in the room, but check the weekly webinar, you'll see. It just means you don't know patterns as yet. Just you need to learn the patterns and understand how the structure. It's not that simple. I will agree with you. You just have to go on. You know, that's why if you want, join us. For $100, you will get it twice a day. Right? And that money is not for the recording. You're not paying for the recording. That money will go to pay for the course. When you meet the sum of the money for the course, you don't have to pay a single cent for the rest of your life. So take someone who's in my room for 4 years. We have traders who are in the room for more than 4 years. Every week, every day, they're getting about 5, let's say 3 to 5 sessions. Let's put an average of 4 sessions a day, right? Multiply by 5 working days, 20. Multiply by 4 weeks a month, 80. Multiply by how much? 11 months. Let's go 11 months for the year, right? So 80 by 11. 0, 880 sessions for 1 year. Multiply that by 4. And these are only sessions. We're not talking about knowledge. Knowledge is priceless. You're getting it for free. These are 1 hour sessions you're getting access to. Multiply that by 4. 4 8s, 32. 2 and 3, am I correct? 4 8s, 32. 32 plus 2, 34. 3,420 sessions. For the 4-year period, you're going to be in there. What's the cost of the course? The entire course, $2,500. You're paying less than $1 per session. So you're paying less than $1 per session where you can make a trade and make money. So you're not paying for the course, right? The knowledge of the course is priceless. You're just paying for time, our time, the time I take to trade, to teach you the course, pass the knowledge on to you, to do one-on-one. That is not counting one-on-one. That is not counting extra classes. That is not counting trading news. That's not counting. The last news we traded, you know how much money we made? We literally made money. So no, the last one was actually break even. The previous one was make money. The last one was most of the trades turned out. They dropped well, but it turned out break even because it pulled back fast. But the previous one was very good. We're not even counting all of that. All you have to do is pay $100. If you don't have the money to join immediately, you can pay $100 a month, and that money will accumulate to pay for the course, right? When you meet the course fee, you don't have to pay a single cent for the rest of your life. You would have access to every single thing we do in here. Right? So basically that is all. You're not going to get it. And then everything else is free, right? And while you're doing that, while you're paying, you will get 2 sessions a day, either recorded, and we're trying to, right now it's recorded, we're trying to give you live eventually. Who are paying monthly gets the recording of this video or must be here for the live session. You get the recording. We will do it live and recording. So we're trying to make it so that you can get it live too, as well as the recording. So it will be live, but then you will have access. If you didn't make it live, you'll have access to the recording. So in the future, both will happen. I want to show you one image how to do it, where there, post the image in the chat. I'll see it, I'll open it and end this there. Take a snapshot of the image, post it in the chat, and I would open it. You can post an image. Just go, you're using TradingView, copy it, click the link. They have a link, copy link, post the link in the chat, just like you're taking, and I will do it. Take it as a link, not as an image. It will be easier. Well, go back, take the image, say copy link. When you click here, it will give you the options, copy link. When you click here, I think, right? No, when you decide to take the image, when you have to click on the camera first and take the image, click here, and you see, copy link to chart image and post the link to me. I have TradingView, I'll open it. Shouldn't be a problem. So we can look at it. Okay, let's go. What else? Let's go with other questions while we're waiting on this one. We're here for an hour now already. So you see, the session is worth it, I think. Although we didn't look at charts, you still managed to get it right. Okay, guys, any more questions while we're waiting? Before leaving, have a look at Euro Oz and Euro New Zealand. Okay, sure, let's do that. While we're waiting, any other questions? Go ahead. Euro New Zealand, we're waiting for a flag here. Let me go back to this one. Okay, it's making one. I think I don't think it's a running flat because we're getting a slow move here. It could be because the market is closed. Keep this right here. And if this turns out to be a flag for upside, you want it to come deeper, go back up, make a flat here, and then we'll bring it to this level. So it is still a valid trade in the morning. We'll change that. If all of you join me tomorrow morning in the New York session, I think we'll have some, then the London session, I think we'll have some amazing trade setups that we're looking at already. And Euro Oz, you said, right? Euro Oz. Sorry, let me go to Euro Oz. Euro Oz has upside, but I don't think this is the one that's a break. We can probably take this to the top, put it to break even, and then see if it breaks out. Like this one, right? You see this one didn't go, you could close for break even. So we could take it to the top for break even, and then if it doesn't break out, we close because it's going to drop back one more and then go. So we'll see. When tomorrow morning comes, we'll figure them out in the 15 minutes and see which one. If it comes down slowly to the bottom here in the 15 minutes, we'll just ignore it. There will be recording of the different sessions this week. Yeah, but the recordings are going to go on YouTube later. Maybe you'll get them one day later. The idea is to get everybody to come and watch it live. Those who don't watch it live, well, will have to watch it after the fact. Because if they're real trades, which we're taking, and these are all real trades, this is what we do. We go through all the charts, we identify the trades. All these colors are trades that we identified. It's a pity we can't do them today because the market is closed. Tomorrow when you come, we are actually going to be in the live trading session. Not what we did today. What we did today is because the US market is closed. Right? Tomorrow we're going to actually be going through the trades and we're going to be taking them and putting the trades on. And if the trade happens during the session, we'll close it during the session. If not, you'll know what to do with it. We'll tell you what we do with it. What about strategies to enter and exit? We have to leave something for you to join the course for, right? So let's leave the strategies for you to make you want to join the course. So we leave strategies for that, right? Will there be recording of the different session this week? Yes, I answered that already. They will be out in the YouTube, but they will be a bit later. Okay, let me see this chart is opening. TradingView, let's see. We can't open this chart layout for you. Well, that's on your side. It's not on my side. Some chart layout you want to open, they're not doing it for you. I don't know why. Maybe you don't have access to that chart. I don't think they can't open it for me. 30th of August. Let me see what you want on the third Nifty and the 30th of August. August 30th, let's go. September, August 30th would be somewhere here. Yeah, you're talking about this one here going up, this thing going up? That what you're talking about? Yeah, but I just explained to you. You have 1, 2, 3. You have 1, you're making a 2 here. Like I said, you don't have enough knowledge about patterns. You're making a 2 here, you're probably gonna go back here. And this might not be the one that goes. This one might come back here for a 1, 2, 3. See, and then go up. That's called forecast. And the only way you can do that is you have to have knowledge of a possible pattern that exists like this. Let me make it simpler for you to understand why, because you're not getting what I'm trying to say. You don't know Chinese language. You don't know Russian language. If I say something in Russian, you wouldn't understand what I say, right? But all the Russians in here would understand me. It's the same thing. Unless you know, and you have to know, you have to know all the existing patterns. You have to have that knowledge of all the existence patterns as a data print in your brain. So when you're looking at a pattern and it starts to happen, you have to decide, how can this develop? So let's say I was looking at 1, 2, 3. And I think this is going to go up. I would say to my traders, there are 2 ways you can trade this. You can either take a flag on the way up, or you can buy it above this top. Now, if you got tagged above the top and it comes back here and it starts to do this, you close that trade because it's going to come here and then it will go back up there. It will come to this top. And then there is a chance it's going to come back here, do this, and then go. Now, why am I drawing it like that? Because that is a known pattern to me. That is a pattern that I have seen many, many times. And I'm thinking, what if this is going to repeat that pattern? Now, would I buy this one to the upside? Let's take the red. Would I buy this one to the upside? Absolutely, if I get a flag here. So you see the small flag here? You probably wouldn't buy that because you weren't there. But if you were here and you see a small flag here, you would buy this to break this top or to come to the top. Break out of here and put it to break even. If that continues to go, good for you. If that is starting to pull back, you will close the trade. You will wait for this, and you definitely wouldn't sell this. You will wait for this to go back here and buy that. Because if you see this, you know that the next big move is to the upside. And why would that be a very good trade? Because if you follow the bigger structure, the probability of this going up is very high. As a complete pattern here, the probability of this going up now is very high. That's about, I would say, 75%. The only way that changes everything now is if this actually comes back to the low here, go back up there, do this, then I would say that's a 1, 2, 3, but this is a big flat. So this has a 1, 2, 3 here, or a possibility of retesting the low. Now, when we saw 1 and we saw this and we saw that, we knew this was going to go up. We knew this was going to come down because that is 1, 2, 3. So this is the minimum for a basic pattern. And that's why we knew that, you know what, this has to come down here and then go back up. Those 2 lines were there like forever. Those 2 arrows. They didn't go on today. Those arrows were there like forever. Go back to my chart on this date here, and you would see these 2 arrows on. If you go back on this date, you will see this arrow here that I took off. Those arrows are forecasting. We keep them there for a long time. We put them because we make forecasts and we see how the forecasts change. Follow us for the week, you'll have a better understanding of the pattern. If you follow us for the week, because what you see, your problem is you don't have that full database, right? It's like your phone. You can't use the phone on a program that is not downloaded, right? You have to download the program and then you can use it, right? It's smartphone, but unless you download that program, you can't use the program. It's the same thing. Unless you download all the patterns, which is what we give you when you take the course, we download all the knowledge to you, and then we said, okay, now you can use it. You're trying to use it without downloading it, right? Is this pattern correct? Let me see. Somebody's sending a pattern. Let's see if that's correct. Which pattern? The way you draw it is incorrect. The pattern itself is correct, but the way you draw it is incorrect. Exactly. But that's not the way you draw it. You should have drawn it like this. That's not a straight line. Let me see if I can get the line straighter. The way you should have drawn it is, this is your first impulse, right? This is 1, 2, 3. This is your correction. And this is your next impulse. So this impulse just has to come back to this low. And then you have this flat. Actually, that's a running flat. You understand why that's a running flat? Good, because the B part broke the bottom of the A part. Once you get it, you see now, see how different it looked when you understand it. Good job, by the way. Just draw it correctly. You got it right. Any more questions? I think everybody's tired. So thank you guys for coming. please spread the link. Make sure we invite more people. I expect to see double the amount of people in tomorrow because we're actually going to be trading. We're not just going to be doing knowledge. I'll also take some questions at the end, but we're going to be trading. So hope to see all of you tomorrow, and bring a friend. Thank you very much. Have a great evening. There is no trading, so go relax, enjoy yourself. See you in the morning tomorrow, 8 a.m. London time. Thank you very much. Bye-bye. To my traders, go relax also. We don't have anything to do. See all of you tomorrow. Thanks for coming and supporting. Could we get a description of the different flats? Ask the question tomorrow. If we have time, we'll do it. Thank you very much. Bye.